Welcome back to the channel. How's everybody doing? We are live on all the platforms, and looks like we're heading to a chase here. So let's do a little update on what we're looking at here. Right, we're gonna do the technicals, fundamentals. Do we have fundamentals today? Not really. I mean, big tech is crushing earnings so far. I think we have a catch up trade, but we will look at the macro and the technicals. I think that is going to be key here. But first, let's dial in on this important macro piece of data, because I think this is we're going to get a big flush to the upside. I think this will melt up for a while before we get a correction. I'm hoping we get a healthy correction here. This is S&P just bursting forward, right? Exploding. I mean, we're making all-time highs, but let's listen into this JP Morgan analyst. Okay, this is a JP Morgan macro strategist. Listen to what he has to say about this indicator. All right, here we go. I just want to make sure everything's straight. All right, here it is.
If I only had one thing I could look at, it would be new orders minus inventories in the ISM. If I had to pick one thing and you wouldn't tell me anything else and you made me invest, you're basically looking at on a leading indicator basis, the difference between new orders and inventories, right?
But what does that tell you as an investor or somebody trying to understand what's happening in the economy?
That's a driver of the business cycle right there, because the Goldilocks situation is when you're seeing orders picking up and inventories are low, right? That's a recipe for non-inflationary growth and margin expansion.
All right, so margin expansion, ISM new orders minus inventories is what we're going to take a look at here, because I'm going to show you we're getting a clean expansion. So yeah, all-time highs. I think this is where we're headed. It'll be a little choppy, obviously, for the first couple months, but we are breaking out, and I think the best case scenario would be a pullback, right? A healthy little pullback to support the all-time high, and then to move higher. I see your guys' comments out there. What up, Chase? Max 7 Peg Low. What up, Chase? So let's take a look at the ISM new orders data first, right? Let's look at that, because I want to make sure that we know what's underlying, what is the actual fundamentals for the macro fundamentals that are in place here. Okay, that's actually moving this market higher, or because this is a macro strategist from JP Morgan who's talking about ISM new orders minus inventories, and that gets them bullish, right? That gets big funds bullish when they see margin expansions. When they start to see the margins expand on companies, revenues going up. This was supposed to be the weakest quarter for the S&P 500. If this is the weakest quarter, then what are we looking at? We're staring at growth going forward. We're staring at forward-looking inflation. I mean, disinflation. I'm sorry. And this is the disinflation I'm talking about. I know we've harped on this many times, but this is why I think we're looking at the chase starting to begin. Okay, we're still getting disinflation. Yeah, there's a couple signals of possible supply chain inflation, but for the most part, core is falling. Okay, number two, or next, I'll just go through these. Disinflation, number one, easing policy from here going forward. Yes, the Fed has not cut rates yet, but from here forward, policy will get easier. Whether it holds where it's at, that's easier than what it was, or it falls, March, April, May, whatever that is. And then you see this is Fed net liquidity, or you could say credit coming back into the system. You think that's going lower? I don't think so. I think we're going to continue to get support from the Fed, especially now that we're getting New York City, our New York Community Bank, and possibly some other commercial real estate issues hitting the market. So expect liquidity to move up. Oh, come on. Don't give me issues now. We'll exit this, then I'll come back in. All right. So next one, here's the margin expansion. No way, bro. This is giving me issues. Okay. I'll pull it up in a different chart. Which one is it? Here it is. I'll just pull it up like this so we can see it. All right, that's frustrating. Here we go. All right. So this is what I mean by margin expansion, or this is how it kind of works. This is the underneath the hood growth that we've been harping on for a while, right? The underneath the hood expansion. And a lot of people don't think it's real. They don't believe the numbers. It's fine. But either way, the manufacturing have been in recession. The yield curve has predicted recession. And guess what? You did have a recession in manufacturing, in housing. You had that, but the recovery is now coming back. This is ISM new orders. Okay. So forward looking growth. This is the number one momentum indicator for the economy in general, right? It's not the absolute level. What up, yo? What up, Hawkwiz? It's not the absolute level, but it is the momentum picking up. And what we did get is the highest level of ISM in 18 months since May of 2022. This is the first expansion above 50 that we've got. Okay, so that has to tell you something. There is something underneath the hood starting to ramp up. And then on the other side, on the flip side, I'll move you guys around on TikTok a little bit so you can see. On the flip side, make sure I don't have missing any comments there. You have productivity level or production levels moving sideways, right? So there's production happening on a macro level, on a macro scale, and orders are starting to outpace production. So what does that tell you? They're producing, right, for the economy, but new orders are coming in. Order demand is coming in even faster than you're able to produce. So inventory should be draining, right? The actual inventory should be draining. This is a macro. This is basically macro class. Where's the stock market? What's driving the stock market right now? In my view, right? One part driving the stock market to answer you there. All right, non-inflationary growth. Now, is that really true? We don't know. We don't know if it's going to be non-inflationary, but if you do take, okay, and I'm going to zoom in a little bit on this one. This is the key chart here. If you do take the ISM, remember the macro strategist from JP Morgan is talking about ISM new orders minus inventories. This is the chart right here. When you put those together, okay, you have orders or order flow increasing against, okay, sorry, I know the visuals are off, increasing versus inventories. If your inventories are not in pace with new orders, that tells you there's a lot of demand for the manufacturing economy, okay? There's a lot of demand. Underneath the hood growth is online now, so that's what we're looking at. Okay. Leading indicator, by the way, this is your leading indicator. Come on, back up. This is your leading indicator for economic momentum, right? Now, when we look at the history of the S&P 500 right here, you can clearly see, okay, I'm going to zoom in a little bit for you guys on TikTok. You can clearly see outside of the recessions, here's your recession, here's your recession. Okay, we're not really talking about the recessions because we know there's a reset. But outside of the recession, when the new orders minus inventories moves up, when it expands, you do get the S&P move higher, right? That's the burst higher. It can still fall, but when you get that initial push higher, that's going to boost margins. That's going to boost growth. So it's a momentum indicator. The momentum can run out, but the absolute level of growth can continue. S&P 500 is the stock market index. It is basically S&P 500 is the top 500 companies in the stock market all put into one index, giving you a look at what the stock market's doing in general, right? Okay, so we had another recession. We're just going back in time looking at history here. And that next margin expansion or the next, ISM minus inventories, that impulse going higher also boosted the stock market. Okay, so you get another boost of margin expansion or another, momentum impulse from the manufacturing sector, which usually leads the business cycle. These are cycles, macro cycles, right? I think the macro cycle started in October 2022, and now we're heading into the spring. We're in disinflation, although that might change. We're going to look at that data that we might be a little stickier based off what we saw today on ISM. Okay, so the next one, but I mean, you can see it. You can see the impulse goes up. ISM, new orders minus inventories, it impulses up, market goes higher. Same thing here. We just had that bottom. Okay, zooming in a little bit. Come on, zoom in, zoom in. Well, you can't see the zoom in, but if you're wondering why the S&P moved up so much, okay, one reason why is fund managers, investors, right? Retail, commercial, whoever it is, they're watching this data. Okay, the banks are watching this data and they're seeing the economy is actually expanding. No recession in sight. The Fed is at the end of tightening. Let's see if let me double check to see if we're getting if Twitter is working now, because I have all the charts on the Twitter, but unfortunately we're getting some issues. All right, let's check back. If not, we'll just jump back on these. So yeah, we're getting that expansion. Plus you're getting labor productivity. You're getting more output per input, right? So if you're a worker, or if you're employed, right, basically on the macro, we're starting to see, come on, load up. I guess it's not going to load up. We're starting to see growth, productivity growth, or every unit of labor that you say you do 1 hour work and you produce 5 units, now you're producing 7 units, right? So you're seeing more growth with less inflation. So that's disinflationary and expansion that we're looking at here. So that's the main indicator that we're focused on. The charts aren't working, so that's unfortunate. But I'll just pull it up on my charts. Man, that sucks. Twitter, come on. I got like the fastest internet too. I guess it's not going to load for us. That's all right. That's all right. We'll switch over to, I'll pull this up, make sure we got all the charts. And we did also, is this the next one? Future spending. Yeah, consumers are positive now for the first time. Okay. We'll just go through the charts randomly. I wanted to show all of them in order, but that's all right. Stuff happens, got to adjust. All right. So consumer expectations, consumer confidence also had a giant boost, big boost, biggest consumer confidence boost that we've seen in the data. Now, I know this is not most consumers. People get pissed off. Oh, well, my situation isn't getting better, but this is relative to the stock market. Who owns most of the equity market is going to be baby boomers, right? The wealthy of the wealthiest own most of the stocks. So either way, we're talking about the stock market moving higher situation. Okay, this is not about personal finance. This is about what's moving the stock market. And if these baby boomers are seeing a better outlook, they're going to spend more. They're saying, hey, we see things, we see the outlook positive and we're going to keep spending. Future spending is up. And then we look at the labor market. We just had this data come out. Okay, let me square it for you guys here on TikTok. The employment level is very high, right? We're at 50-year low unemployment. According to the numbers, you don't have to believe them, but the market, this is what it's reading. And you're seeing momentum pick up in the payrolls data, right? Payrolls is your momentum, your employment momentum. And more people are working, the more people that work, the more spending that they're going to do. And the unemployment rate is low. Okay. Down here, labor productivity, we already went over this. There's more, this is productive growth. This is very explosive. This is very positive because it means you don't have to use debt to grow. Right now, the US, right, over the last 20 years, the US has the debt burden is up 5x. Okay, from like 5 trillion in 2000 up to 30 trillion, 31 trillion, 32 trillion, and GDP has only doubled. So you're using a lot of debt growth, but as labor productivity picks up, you're going to get real growth. So real GDP growth is pretty high so far. Okay, but that's not even the best chart. I'd say the best chart is not the best chart, but the chart we want to look at, and I'm just gonna have to pull this up, randomly, not in order, is the Fed Now GDP forecast. Fed Now GDP forecast last week reading here is at 4.2%, down from 2.1%. I mean, up from 2.1%. So there is momentum coming into the market. This is as of February 1st. So it was about 4 days ago, but we're gonna get another update and actually see where that is. Okay, minimize. No, we don't want to see that. Right? So those are those charts. Now, retail sales, new orders picking up, building permits. Man, we kind of went over this last week. We're getting momentum. I want to show this. Oh, money supply growth. I want to show the money supply growth also. Okay. Money supply growth. I know people want to see the charts and go through it, but this is what's driving the market. Money supply growth too. This is just background information, right? It's like, hey, are we going to collapse? I know there's a lot of questions that we can't go this high. We can keep going because we're seeing that global liquidity. And another word for that is just, credit. The credit cycle is picking up. This is the credit cycle. Up, down, up, down, up, down, up, down, up, down. We're starting to turn up. This is over what, 10, 14 years. Going back to 2000, this is 20 years of data. So we're starting to turn up again. The credit cycle's turning up at the moment. Now, this is the US credit cycle. This is US money growth. Money growth is bottoming out. I don't have the individual chart, but it's here. It's this one right here. And it's starting. I should have just pulled it up, but it is starting to pull up. It's starting to turn up, and we're going to turn up because we have a lot of fiscal dominance, right? Meaning the US Treasury, the White House, whatever it is, they're spending a lot of money. So we're going to get more, the fiscals overcoming the monetary policy. And then right here, you can see levels of money supply are set to break out. Okay, money supply momentum. So if you measure it on a year over year basis, which gives you the impulse, which gives you the momentum, right? It's starting to pick up. And it's been revving up for a while. It bottomed literally October 2022. That's when the market bottomed. That was the bottom of the bear market, when money supply momentum, not the absolute level, when the momentum picked up. That's why we look at momentum indicators. They don't promise the future, but they give you insight into what might be going on. And of course, bottom left hand, like I said, QE going forward. We're going to see QE going forward. It doesn't happen right away, but we are set to be looking at QE, to be having QE. Let's see if this chart's working now. And then we we got a lot of speculation too, from Meta having the biggest one-day move as far as market cap in history. Man, this pisses me off. Come on, Twitter. Well, it's probably my computer. Probably got too many things. Oh, there we go. Working. All right, perfect. Perfect. All right, we got it working now. So speculation, right? And this kind of sets the groundwork for why I think we're gonna head higher. Okay, maybe we correct. That would make sense. But the speculation is starting to pick up. Speculation is recovering. And a lot of people didn't participate in 2023. There's a lot of career risk going on, right? For fund managers who were not in the Mag 7, who said, oh, no, we got to stay out of the market. There's going to be a huge recession. Well, there's no chance. There was no recession in 2023. So now you're seeing chase. The chase is happening. This is why I say the chase has begun. We're seeing speculation coming to the market. Meta had the biggest one-day market cap, upside, the biggest one day upside move in market cap, right? That's what was 197 billion. That's bigger than most companies. That's bigger than most economies. 197 billion dollars in one day. That is speculation. That is chasing. Those are not retail traders. Those are not retail investors. Those are fund managers piling in. The last one was Apple, Amazon, Nvidia. Nvidia really had the closest to today. Nvidia had the biggest upside move. You guys remember that two quarters ago. So the average now, once we're at all-time highs, because the S&P is at all-time highs at the moment. We just broke out of all-time highs last week, 2 weeks ago. So we're now trying to find support. The longer that we hold the all-time high, the more likely we are to move higher, of course. So on average, okay, if you go all the way back to what is 1950s, I believe, on average, the S&P moves up about 14%. Moves up to about 14% on average after you hit all-time highs. So that's also pretty bullish. It's not a promise. It's just a correlation, just something you pull out of the bag. And then during an election cycle, which you usually get, now these are three. In the green, this is non-election cycle. So we're not really looking at the green. That's non-election cycles. Typically you have a big move going back to 1950s. No, 1928. This is going back to 1928. And then purple is when is actual election years. So presidential election years is going to be in purple. That's the one that we're correlated with. You get some chop, you get chop, chop, chop. And then the second half, you move lower. You move higher, my bad. So usually the first half is sluggish, corrective. And then the second half, you move higher. So, it's not that simple though. Maybe this time we move higher in the first half and the second half is sluggish. I doubt it. What I think happens is we have a big burst in the first quarter, which we're seeing right now. Following the Santa Claus rally, a lot of people are piling in, they're chasing. And then sometime around late February, March, maybe after NVIDIA earnings, because typically you get a rotation, the market's up a lot, there's a lot of speculation, you get a correction, you get people who cannot help themselves, investors, fund managers chasing, because they're seeing that the fundamentals, right? The ISM, the PMIs, the forward-looking growth is showing momentum. So they're gonna come in and buy. There's no reason not to. The Fed will cut eventually. They're going to cut going forward. And, most of the people who sat out in the last year, it just never worked out for them. So history shows us first half correction or first half sideways, right? Kind of sluggish. Second half, boom. I'm sure it's not going to be that simple, but that's what we're looking at. And as of today, now we could just look at the live chart on this. We have how many stocks moving up. Let's double check. How many stocks moving up in the S&P 500 above the 50-day moving average? Let's check that out. It's market breadth, or how wide is the rally? How wide is the rally at the moment? We go to internals. Let's go to, okay, there we go. How many stocks are moving? Now it did come down a little bit. Let's switch this up to area. Okay. Where's the area line? Oh well. All right. So we're at 64% of companies, and this is bullish. 64% of S&P 500 companies are above their 50-day moving average. 64%, still bullish, right? Once you get below 50, then you basically say, okay, below this line, half of the companies, we're crossing below half, right? Half of the companies are above the 50-day moving average. So if we can hold this, then it's very bullish. If you get below it, momentum is slowing down. It's not a promise. It's just a correlation, but you're still getting a lot of companies above. More than 50% of companies are still above the 50-day moving average. We know the semiconductors are moving, cybersecurity moving, and banks are a little weak. We'll see how that plays out, but you do have a lot of progress there. And if we look at the macro, and we're going to get to the news today, because today was a little bit of inflationary news that we did have. Put to call ratio. Actually, let's check this out. Where are we at with puts? Put to calls. Always got to put this on a line. Oh, it's coming down. It's about halfway. So when it goes up, there's a lot of puts coming into the market. We're about halfway. And this is why I think we're going to have a correction at some point. Maybe it's not that big. Maybe it was today. Maybe we just melt higher, because the market is strong. It is a lot stronger than I expected at this point. A lot stronger. I thought we would have a correction. It looks like we're just floating above that level. And this is all happening while the dollar is surging. And typically the dollar is risk off. Okay, typically the dollar is going to be risk off, but we're not seeing that. We're not seeing risk off in the dollar. We're seeing risk on. Maybe some, I think small caps are off a little bit, but there's a reason why. There's a reason why, and we're going to get to that, because that was today's data. Okay, that was today's data. All right, so here's what we got today, which slowed down the market a little bit, which is well needed. So we had now the ISM new orders minus inventories. That's the manufacturing sector. That was in the reason it's exciting, because it's been in recession. Now it's starting to go positive, but the services sector has been positive for the whole time, right? We've been positive in the ISM services. Oh, come on. We've been positive ISM services the entire since 2022. Come on, no way, bro. Got the M1 chip too. We literally got the strongest. Okay, there we go. One chart. So prices paid is the supply chain prices, right? These are supply chain prices, ISM non-manufacturing. So just think services, right? These supply chains for the service economy. The whole index is still positive. So 50 mark is about right here. We're still moving up, but the prices are exploding. Not very good news. I don't know how much this has to do with the Red Sea conflict. Okay, I don't know how much has to do with it, but we do know that prices rose significantly, and that usually signals that inflation is stickier. Okay, inflation is a little stickier. They're not coming down. So we're getting growth, but it's not disinflationary growth, according to the ISM. It's inflationary growth, which is a reflation. The reflationary. This might keep Powell from hiking, and this is what we saw on the, right below it. Once that survey came out, the S&P did sell off, and we had a rate cuts pushed out further. So the probability of rate cuts got pushed out a little further. Last month, we were at a 42%. This is the rate cut right here. 42% chance of a rate cut. That's been coming down incrementally. Today, I think it dropped like 4 points. It probably changed again, but so far the market is not even pricing in a rate cut anymore. Powell pretty much made it clear we're not hiking in March, but you never know. The data could switch, but this data tells us he's probably right. We're probably not hiking in March, because prices paid went higher, and prices paid leads is going to be a leader to CPI in general, at least for supply chains. So what that might mean is consumers may be paying higher prices, but companies are going to be more profitable going forward, because we're not seeing a commodity boom, so it's not that big. So what was the reaction for the market? Risk off for the dollar. Okay, the dollar is starting to break out of this level. So typically, I'm hands off here. I'm a little hands off. I'm watching Tesla. I'm looking at crypto. Crypto doesn't even care at this point. Very strong speculation, but it is a risk off move. Okay, the dollar's starting to push out. You got rates also starting to push up. So risk off, okay, funnel into dollars out of equities, out of whatever it is. not hugely, because you're seeing S&P recover already, but you're seeing rates start to tighten for the Fed. The Fed says, hey, and this is what they want. They want the bond market to tighten for them. They don't want to have to hike. They want the bond market to hike when you get this kind of data. When you get inflationary data, and inflationary doesn't mean, oh, we're going to be inflationary forever. It's just partly inflationary data. When you get that, the bond market, or the Fed wants the bond market to do the tightening for it. So that's not too negative. Okay. We're at 4.1%. Not too bad. Shout out to you, Dimaj. I see you with the support, right? So we get a little bit of inflationary growth. Tightening of conditions is what we saw today. A small tightening of conditions. Now let's hopefully this doesn't freeze on us. Again, back to the charts. Back to the charts. Right? And this is the US dollar starting to break out of resistance. Typically, a strong dollar is inversely correlated, or it just means risk. It means risk off. But when you get the stock market still holding in there, okay, we're still holding in there. Let me just move. Let me see. Is there any important charts on here? Well, dollar 10-year, right? Still moving up. If we get resistance here and roll over, we're going to burst out. The market's going to continue to grind higher. I just don't know what I don't know what the timing is going to be exactly. Nobody could time it, but we'll look at the levels where S&P could probably settle in at. There's a couple levels S&P can settle in at. So when the dollar slows down, you probably get a pretty strong impulse back to the upside. Earnings are almost over. NVIDIA, we got NVIDIA next. Big tech did pretty well, as always. And if rates do ease, I think small caps do pretty well. That's my anticipation anyways. So we're going to look at macro. Okay, macro, we have the S&P still moving up. Now this is a pretty good sign of growth here. Let's go to the daily chart. I think we're frozen over there on Instagram. Unfortunately, right? So this is our all-time high. We break the all-time high, pull back while the dollar goes up, right? So we get the ISM services survey today. Let's go to the 30 minutes. You can see exactly how this played out. You got the gap down. ISM services came out. Okay, inflationary. We sell off, but then we bounce right at the all-time high. Okay, we bounce right at the all-time high, move up. Now this is a lower high. Okay, yeah, you could short it. It looks like we kind of filled the gap here. We could be moving lower, but as long as we hold the previous all-time high, very, very strong, very good sign of strength for the market. Okay, and that's kind of the middle there. If we fill this gap, this is now the zone we're looking at. This was the previous low, so this is a zone. We break above it, very bullish. We break below, then maybe we get that correction. Maybe finally we roll off. Positioning comes off a little bit, but I do expect that to get bought up pretty quickly, given the fact that we are expanding. The economy is still expanding, and there's a lot of other reasons. Fiscal dominance. There was no recession. There was no recession. The chase is going to continue. Speculation is coming back into the market because of the career risk for a lot of these fund managers who just missed out on the bull market. Okay, so yeah, these are technicals at the moment. I don't think the VIX is really moving much. Still at pretty low levels. Take a step back. Do you think the U.S. elections will impact the market? Yeah. So they always do to some degree. We're in an election cycle. Typically, Dimaj, the election cycle, on average, you have a weak first half and then you have a strong second half. But, the markets are tricky. So you could get a strong first half, which we're getting right now. We're actually looking at a strong, let's go to SPX. We're getting a pretty strong first half so far, right? We're at all-time highs. I think this is the previous all-time high. Yep, about 4, somewhere around here. So you're getting all-time highs. And if we just keep grinding higher, you're starting to get the strong first half. But we're only in Q1. So we still have 2 more quarters to go before it's the first half. So maybe we bid up first half, we sell off second quarter. And that's the big buying opportunity in my view. I'm not saying, oh, hey, TikTok, chill out. I'm not telling nobody to buy anything. Okay. All I'm saying is when you get this correction at all-time highs, That's pretty much it. You're not going to go much any lower without a black swan event. And I know people are saying, well, commercial real estate, the Fed will come in with the Fed put for commercial real estate, right? It's not systemic into the big banks. It's not really systemic yet. Credit standards are actually easing at the moment. So you do have consumer slowing down. You have delinquencies, but the baby boomers have most of the money. They're not the ones that are delinquent. It is the younger generation. And as long as they have employment, which we see the employment level is still pretty high, as long as you have employment, as long as the payrolls are adding into the market, you're getting momentum. Spending will continue despite some delinquency. So I think we're strong. I think this is going to we need a correction though. We need a correction to help to get things a little healthier. Oh, come on, dude. This really pisses me off. Guess we'll have to deal with it for now. Oh, wow. Yeah, so those delinquencies, I don't think they pose the biggest risk. You might get a pullback. Those people are not invested in the market. And I think the mistake that investors make is they look at all this macro warning news, but it's not that significant to the overall market, right? The top 500 companies are there for a reason. They're in the S&P because they're the top companies. So that's why you get stocks typically outperforming. You have the strongest companies. The Qs are much stronger. So again, you want to wait for the dollar to ease up a little bit or to find some type of resistance. I guess I can move this up because this is kind of our last supply zone for the dollar. Right? This is this would be the tippity toppity, right? Before you go back to this level is right here. So maybe the dollar peaks out here. If this is the case, then you'll roll over and we'll see because we don't have any more inflation data. You mostly have Fed speak this week. But if the dollar peaks out here and starts to roll, the S&P is probably going to make new highs in my view. I think we make another new all-time high for the S&P. And then same thing for rates. If rates look a little more constructive for the bulls because they are starting to find resistance at the prior resistance. So then for rates, you're looking at what 4.1, 4 point. I guess let's just call it 4.2%. Between 4.2 and 3.8 is going to be the range for interest rates. Okay, 3.85 to 4.2. And if rates move sideways, constructive for the market. The market's okay with sideways rates. It just doesn't want to see rates surging to like a tax on the market. It's going to be like a tax on borrowing. Borrowing goes higher. But if borrowing stays in this range, just straight, right? The economy, ISM's already recovering. So we'll see. Now, if inflation does show itself to be, higher than expected, then rates will break out. Then you get that correction. So, next inflation report, what is it? A couple weeks? February. It's usually like February. I think it's 13. It's like in a week, February 13th, I believe. So what, about a week and a day next week, basically. We'll see if rates get above that. I think they're stuck here until that inflation report. ISM is signaling a little bit of inflation, a little bit of inflationary growth. But how significant is it to the trend of inflation? I don't know. Maybe it's not that significant. So that's what you're looking at, dollar and US dollar and US rates. If this is the top, right? Because now we're at that stretched zone. If this is the top, then bullish from here. Definitely going bullish from here if this is the top. Other risks to the market, obviously oil, but guess what? Oil's not showing us much risk. Oil is not showing us much risk. It's at 72. So we did have a surge and then it came right back down. And that is investors saying, the Middle East conflict is not that bad. The Suez Canal is not as dire as we thought. Now, yeah, of course it could ramp back up, but this big sell-off tells me that geopolitics are not increasing. I mean, the risks to geopolitics are not increasing. Now, if you get some type of, nuclear weapon, that's a whole nother ball game. That's, you're going to see the VIX spike if somebody mentions that. But economies are still weak. The US economy is leading and, we're doing well right now. There's no commodity. I think I added the commodity index on here too, because that's going to be another sign of inflation. So when you get reflation, you should see the commodity index start to gain some traction, but it's been falling since, what is this? June 2022. So and this is oil. right? Nat gas, wheat prices, whatever food prices there are, these are the commodities to that. So as long as this keeps trending lower, then you're not really going to get an inflationary cycle yet. The ISM's prices paid could, that move higher could be just coming from supply chains being a little more backed up. Not necessarily real inflation, but supply side backing. And as long as labor costs continue to fall, employment costs are falling, then it's going to be constructive for the stock market, right? Stocks and crypto. Crypto's more so looking at liquidity. Crypto's doing well. We got Chainlink exploding. You guys already know what I think about Chainlink, leading the crypto market at the moment. So a lot of constructiveness. Again, 14% at all-time highs. Usually you go higher at 14%. And yeah, 14% is usually where you go higher. So individual stocks, Tesla getting pretty wrecked here. Let's take a look at Tesla. Okay. Now, FundStrat's technical analyst had a couple things to say about this. I think he said that he doesn't expect Tesla to really catch momentum until April, right? March, April, because that would be sometime around the Fed cutting rates. Maybe they don't in March. Let's say they push it to April, May. You see Tesla start to bottom out. It could be bottoming today. It could be today. You never know. This is a wild name, right? This is very wild. Most traded stock in the market by far. Nvidia might take that over this year. We'll see. But so far, there's a lot of shorts in here, and this thing could squeeze could squeeze. The RSI. Okay, the RSI is starting to recover. No way. So just the mention of Tesla alone got me violated on TikTok. That's crazy. Just mentioning Tesla. That's fine. That's wild. See, if I'm even mention it, I know you guys aren't on there. You probably don't care, but fine. We'll get this going. We'll do this a lot quicker then. I'll just move this out of the way and we'll get going here. So hopefully they move on over. Anyways, yeah, Tesla, here's what I'm looking at. I mean, the RSI is starting to dip lower. Okay, on the daily. This is the daily chart. So that's weakness. It did not recover. We should be seeing the RSI recover if it's near time. It's not recovering. It's not recovering yet. Also MACD is very extended, but let's take a step backwards. Go to the weekly chart. Okay. I don't want to say for sure, but once you get closer to this oversold 30 on the weekly, I mean, that's probably the next game time. This thing can extend a lot further than people expect. So I think it is going to roll over, and maybe that spot's going to be somewhere around 150 to 155 to 165. This is what I'm thinking. This was that last support. So if you go to the monthly chart, kind of look at where institutions stepped in last time, right? Institutions stepped in starting at 165-ish. So maybe that's the level. This is also anchored VWAP. Okay, so volume weighted average all the way back to 2019. It slipped everything else. But if you go back to 2019, before the big rally in Tesla, after it consolidated for 3 years, and then it broke out, had the vicious rally, right? Led the stock market. Well, it looks like it's coming back into that anchored VWAP section. So target for me, 165-ish, 165. We'll see. We will see. And also that RSI on the weekly, not the monthly, but the RSI in the weekly turning back up. But it looks like it has a little more room to go down. Okay. Eventually they're going to get exhausted. I'm almost certain there's some big orders down here waiting to come in. Energy storage is going to be good, but those are the technicals for Tesla at the moment. It has a long way to go. Out of the Mag 7, it is getting crushed the most, but you do see a potential. There could be a potential reverse head and shoulders, and that's going to be a powerful trend if we get there. So 165 now. First it was, I was somewhere around 185-ish, couldn't hold that level. It tried, couldn't hold that level, gap down. Now me using, just using instincts, which is my opinion, I think it bottoms off of a giant gap down. If we get a big gap down in the pre-market, the shorts will cover. Okay, longs will come in. I already know I see a lot of people already saying I'm ready to buy at these levels. I mean, Tesla's down to where it was, what, 3 years ago? Almost 4 years ago. So, nobody's ditching the narrative. The narrative is still there. It's just Tesla has a lot of headwinds ahead of them. So when the rates come around and start to get cut, or you get close to the rate cuts, yields come back down, and then you're oversold, shorts cover, they're going to get squeezed. You might have another gamma squeeze if they have some good news. Full self-driving comes out, you get a gamma squeeze. Who knows? All right, we'll move on from Tesla, but that's what it's looking like for Tesla. I'm thinking 165-ish. Okay, and it's hard to stay 165 to 170. This is the zone that I'm looking at least for a bigger term swing trade, and it could consolidate around here for till May. Who knows? I really don't know. I'm just looking at the technicals. I'm reading from what I see here. Chainlink. I became a link bag holder, always buying the top. Oh, Bukowski. I became a link bag holder, always buying the top. Long link. Let's be leaving. Yeah, it's tricky. I have a couple friends who are interested in Link, and I told them, hey, I mean, you guys remember we're on here. I made the video getting Link at $5. Oh, my bad. Let's go to Link. Getting Link at $5 back here. Look at that. Now look at that MACD. This thing is exploding. So remember back here, we made the video grabbing some Link at $5 just because of the thesis, right? Very strong thesis. Best fundamentals in the crypto market, in my view. I mean, we're not talking about Bitcoin and Ethereum, but $5, and now it moved up, and I even got scared here. I was like, let me add some more, and I waited too long. It popped up. I was like, let me add some more. I added a little bit here, and then it exploded. This is where I made my last ad, pretty much in this moment. But I know some people who I told them, and they just waited too long. So what did they do? They got scared on this retracement, and they sold, right? They sold, and they thought it was going to break out. They bought up here, and then they sell down here. Now we're breaking out. Just got to be patient with crypto. I've been saying it the whole time. The business cycle is turning up. ISM new orders minus inventories is the signal. New orders is the signal. Crypto is very correlated to the business cycle. Okay, the Fed is done hiking. The Fed is re-stimulating the economy. If something breaks, they step in. And, Link has been leading the rally so far. So, my next target, I think it runs to about 25. I mean, there's not much resistance here for Chainlink. Once you clear 1950, right? That's that last zone. Yeah, bro, if you're looking 5-10 years out, then I mean, it's nothing, right? If you're looking that far out, it's the pullbacks are nothing at this point. So I think it's about $19.50, I'd say. Once you clear that zone, and we got rejected. So pretty clear, got rejected at that previous, supply zone so far on the daily chart. And if we zone in a little more, there's a nice support here at 1750. So I would say, hey, next support, if it can hold 1750, if it does come back down here, well, voila, right? Voila. But we just don't know. We'll see how rates are surging at the moment. So you might get an opportunity for it to come down here at 1750 because the overall market is weakening. And at the same time, you have the dollar surging. The dollar is going to slow down crypto. It's either going to correct or it's going to slow it down. And we do get the dollar making a big, strong move. If it does turn here, though, I expect everything to go back up. Same thing with rates. If rates do roll over from here, I expect it to go back up. Just given the correlations, right? Just given the correlations. Not many risks in the market that the Fed can't take it. The biggest risk is really if inflation does start to pick back up. If it does. But like I said, the ISM new orders minus inventories, the macro, and if you wonder how I've been calling these rallies, I've been studying macro for the last 2 years, not this crap where everyone's like, oh, recession, the yield curve. The yield curve is irrelevant at this point because the yield curve predicts things based off of unknown information. But now we're in the age of the most abundant information where people are on Twitter are spreading what the Fed is doing and what's going on in macro land instantly. So people the market is reacting way faster than it does. That's why we sold off in 2022. That was the recession that the yield curve predicted, and we already had it. We already had the recession, I'd argue, outside of a black swan. We're not talking about some type of black swan event, but just in general. And then you had the March, collapse. What happened with the March collapse? Well, the stock market tried to roll over in, last March. Oh yeah, we're really, I'm just going to show that. We tried to roll over last March and it just didn't happen because the Fed stepped in. It was right here. No, my bad. March was right here. Okay, it almost rolled over, but the Fed stepped in, bank term funding program. Now that ends in March. So that's another risk is okay, but do you really think the Fed is going to end the bank term funding program and just just let everything crash? I don't think so. They're going to support those deposits in those banks. If anything, the banks get absorbed by bigger banks. That's my guess. The bank term funding program ends or they reinstate it, and big banks like JP Morgan, Wells Fargo, Goldman Sachs, whoever it is, they absorb the small guys, like New York City, New York. And we saw that with SBV, they got absorbed by another bank. So more liquidity to come, plus rates have now peaked. So that's why stocks are moving up. That's why Bitcoin front round this move, and now you have Chainlink front running the move for crypto. So we'll see. I mean, it would be nice to get a pullback, but crypto is very explosive when you have a real narrative. I mean, there's a lot of white paper. There's a lot of white papers for tokenization. If you look at JP Morgan's Onyx paper, it talks about interoperability with blockchains. Now they say it's going to be tough to get a one protocol to interoperate, but this is it. I mean, Swift is working with Chainlink, CCIP. Are you holding Palantir? Unfortunately not. Unfortunately not, Bukowski. I wish I was. I was in the past. I got ripped up on Palantir, if you remember me talking about it. Let's say Palantir consolidates a little more. I'd almost hope that Palantir gets smashed and Chainlink goes higher, because what I'll do is I'll rotate some into Palantir. But I'm not. I kind of went all in on Chainlink because I was just like, I'm an all-in guy. Okay. And there's downside to that, and I accept the risks, but I think Chainlink paces Palantir, and right now Chainlink is at what, 19. So earlier Chainlink was at like $7 and Palantir is at 21. I was like, oh man, I should have just kept my Palantir position. But I think this is the crypto cycle. Palantir, best AI pure play though, in my view. I think it's still the best AI pure play. The trend, the technicals look like trash. I'm not gonna lie. The technicals don't look good. So I would hope it comes back and retests 14 while Chainlink runs to 25. I will rotate some into Palantir because I still believe in it, but I'm not in Palantir at the moment. Okay. Still think you've read the newsletter. Obviously, I still probably my favorite AI play. I think they're going to crush earnings. Oh, they have earnings today, as a matter of fact, right? We got earnings in like 30 minutes. Oh, maybe we'll go live. What do we got? We got 30 minutes till earnings. Shoot, we'll just show the earnings for Palantir. I think they have like no debt, right? They have a lot of contracts incoming. The only thing behind them is that a lot of people dislike Palantir politically, which is silly to me. Would you say Palantir is Jeremy's market tuition? Yeah, Palantir, Chainlink. Tesla was wrong about this year. Okay. Strong first half in 2023, very weak second half for Tesla. So I was wrong about Tesla making all-time highs. I thought it would. It decorrelated from the market. But what did I say? If margins don't bottom, Tesla is not going to be able to pick it up. And they didn't bottom. They kept cutting prices. Good for the long run, but not for the short run. So that was unfortunate. But Chainlink and Palantir so far are starting to play out. People talking today, in the pursuit of market knowledge, we all have to pay tuition somehow. Yeah, you got to pay tuition somehow, 100%. I've been wrong so many times, but yeah, Palantir looks great. Now, again, for me, best case scenario would be that it sells off, gets crushed for some dumb reason, and Chainlink is up and I rotate into some Palantir. But who knows? That might not happen. Palantir might run right back up to here. It might just gap up and explode. Who knows? Right now, the Fed is in a weird position. So I doubt that Palantir can make a sustainable move back to like 25. I really doubt it, just given the backdrop. But it could be another NVIDIA play. Who knows? It could be another, you see this move with NVIDIA and Meta, right? I mean, these are overblown. These are very overblown. I'm sure it either peaks into earnings or after earnings, and then it kind of breathes a little bit. But this is why I'm a little, I don't want to say bearish, because I think the overall market can still melt up, right? I think it still melts up, but I would say that it would just be a lot healthier for the market to retrace. That is the buy. I think I can say this on on YouTube, not financial advice. That's the buying opportunity, is when you get the S&P and the Qs really come back to all-time highs, right? Qs haven't even broken out yet, but if you get the S&P, it's a little clear, come back to this level, right? 482-ish, consolidate, hold the highs, the all-time highs, then I'm going to be definitely looking where Tesla's at. Okay, because you just don't get those opportunities very often. Every 6 months, every year, every 3 years, you don't get those type of opportunities, especially with the transformative technology like Tesla, right? They just haven't came out yet. They haven't executed because it takes a while for innovation to execute. And so far, Model Y is the best-selling car. Energy storage is coming back. Full self-driving is right around the corner. We say that every year. Who knows? But yeah, that's what I believe. Until then, though, I still think Chainlink is, my favorite. Now, I'm also taking some risk here, okay, on cooler technologies. Not a whole lot of this is the most risky play that I've ever taken. I'm not really sized in, but battery technology, they got a contract with NASA. Okay, they have a contract with NASA. They have a contract with a couple electric vehicle companies. It's getting crushed. The market cap is micro. I do not at all actually advocate for this one, because this one could go to zero. I don't think it goes to zero, but it could go to zero. And it's extremely oversold. You can see the RSI starting to pick up a little bit. Bullish divergence, but when they're this small, the bullish divergence doesn't matter. You just have to execute. They got to do well. What is that? 17 cents. All-time high is about $3. But forget all-time highs. They got to execute. If they do, 400 million, this is more fundamental wise. But anyways, I think they have a pretty good balance sheet. We'll see what happens. Also, the CEO just bought 500,000 shares. So that's bullish for me. 500,000 shares. We'll see what earnings brings to this company. But I'm not advocating at all. It's just a very risky play that I'm looking at right now. Anyways, yeah, back to the overall market. The business cycle is ripping higher. That's what I think. The business cycle is turning up. S&P probably melts up a little more because we're supporting that previous high. But we are a little, there's some bearish divergence, but on the upside, I think we can still move up. What do you got to say? What do you got, Carbides? Give us some knowledge. Hit us with some technicals there. There was a company that I was looking at once, EVLV, but it's mostly held by institutions, and they hold the power to dump. It's a cool company. Interesting. EVLV. Let's see what that is. Technology Holdings. What do they do? Wondering what they're doing. Isn't that a beautiful MACD though for Chainlink? I'm going to talk a little bit about Chainlink here. Look at that MACD, Carbides. Look at that MACD, just pointing straight up. We're getting a little overbought on the daily, but again, it is a crypto, so it probably goes much higher. Let's look at that weekly MACD. Starting to, weekly MACD looks pretty good. RSI looks good also on the weekly. Monthly, oh man, what a move. Monthly MACD just starting to expand, and also the RSI. So I like it. I mean, what a shelf. Look at that shelf, just shelving up, just stepping higher. Okay, enough of that. I think EVLV does metal detectors for schools and government stuff. Oh, interesting. Okay. Yeah, I've never looked at those type of plays, but metal detectors for schools. I wonder what the total addressable market is for that. Thanks for sharing. Okay, let's see. Yeah, that makes sense. But yeah. So container ship what is it? Container ship. What am I saying? Container insurance is, if the containers continue to climb, I think that's the biggest risk that I'm seeing in the market right now. Supply chain issues, supply side inflation a little bit with growth going up. If you're getting the economy starting to recover in both services and manufacturing, and then all of a sudden the supply chains get backlogged or backed up, then that'll be some supply side inflation, unfortunately. But I don't think it makes inflation like trend up. I just think it keeps it stickier than it is. I think it just keeps it a little more stickier, unfortunately. And then I'll look at some other plays too. Look at some other charts here. Link looks great if you put EMAs and hide price action. It looks great. Oh, if you just put the EMAs on. I don't have the EMAs on this chart. This one's like a trading chart, so I don't have the EMAs. Let me see what it looks like. Put Link in that window. I probably don't have the same EMAs as you though. But if you're talking about this, yeah, it looks great. Probably just consolidates on this. Where this would be the daily. This would be like the 20, the 9 and the 21 EMA. Probably looks better on the weekly. Right off the weekly 9 EMA. No, this 9. Yeah, right off the weekly 9 EMA. It looks good. Moonshot. It looks like a moonshot to me. What are we at? 11 billion market cap. This is the size of Ethereum back in 2019 when Ethereum was at $120. So this is like a Ethereum at 120 as far as market cap. Anyway. And Carbides, did you cash that Tesla? Did you cash that Tesla? Well, I'll just put it on here. Intraday, I missed it because I was like, you know what I said? I said in the chat, I said, well, I think it goes down to 165. We'll see. I'm actually hoping it rolls over because that was a nice retracement. But I think it's struggling at VWAP. This was VWAP I'm pretty sure this was VWAP. So it looks like it's rolling back over. I think we get a gap down at some point. We're going to get a gap down in a flush. I'm not saying, I can't say we will, but that's my intuition. We get a gap down. If we do get a big enough gap down, I think I just have to rush in there and cash that knife. Obviously with risk management, but I think that'll be it, the local low. And then maybe it retests it again, but you always get the chance of a very sharp rally just on technicals. Such a delay on here. Let me see what it looks like over here. I think I have Tesla up. Yeah, there it is. Oh, it looks like it's regaining VWAP. Never mind. It's starting to regain VWAP. Trying to. At 180. And I'm trying to decide, do I want to buy shares so I don't get ripped up with theta or just launch those leap calls? I don't know. I traded the downside and bought Tesla shares today, but it might go down more. It is a very small position. 100% makes sense. I'm on the same page. Definitely on the same page there. SMCI 2 has been ripping. This thing is outpacing NVIDIA at the moment. Of course, don't chase it, but I mean, what a trend. What a trend. Just straight up. I mean, somebody short this. Somebody short this. Oh, what up, Doifer? Look at that, man. Somebody short. I think people are trying to short it and they're just getting stopped out. They're getting stopped out. So once these roll over, I think you'll get the market correction. NVIDIA, AMD. Did AMD already? AMD's consolidating. AMD looks like it's ready to make another move. Would you say here, Doifer? Ben Goertzer? Goertzer? I don't even know who that is. Sounds German. Definitely has some interesting speeches. Okay, AGI. What is that? AGI X USDT? Oh man, I messed that up. I think you were telling me about this before. What's the name of the project? Looks like it's finding some support there. Just don't get tricked. I saw altcoin daily. I love to hear altcoin daily, but he is not your friend. He had somebody in our Discord chat talking about a new yield farm, and I'm like, bro, they're literally promising on that yield website 41% interest, 41% yield on USDC. You got to be kidding me. That is a scam. There's no 41% yield. Everybody would be on that 41% yield. The hedge funds would be in there. That is a red flag for scammy. 41% yield. You got to be kidding me. 165 is good price. Small gap at 147. Right. You remember last time Tesla, I'm pretty sure you're talking about Tesla, didn't even get down. Oh, wait, you're talking about Tesla there. That's not SMCI. Remember last time Tesla had that gap at 147, never got there? I thought it was 144, but I remember it never got to the gap. And see if we can find it back here. I think it was right here. Let's take this off. Gap was, let's see, 144. Yeah, that's about 144. I guess you're measuring from the top of the wick, huh? Yeah, he's going from the top of the wick. 147, 144, never got there. Maybe it's heading there for this time. But yeah, it never filled. So typically the bottom, you're going to have a big candle that engulfs, right? Maybe a little gap down and then a candle that engulfs the previous candle. That usually marks the bottom. Got it here. Gap down. Big engulf. I guess it didn't exactly engulf, but it was a lot bigger than the previous candle. Did we get it up here? Oh, well, those aren't really big sell-offs. This was just a big gap up. Gap up, gap up. Nice capitulation, but I still think we have a little further lower to go. Oh man, what's going on with Instagram? Hey, say something on Instagram if it's working. It's frozen on my end, so I don't even know if it works. It looks like it's not working. We'll just exit that then. The streaming stuff's annoying sometimes. I hate doing the technicals to figure out how to make it work. Well, it works on YouTube. We're working on YouTube pretty good. I just added SMCI things to shortlist. Yeah, bro. There's no way. SMCI is insane. Things to short. I mean, you definitely got to be careful here, but it is way overdone. And I think with the conditions right now, some of these things could be 2 days lower. So if you do short it and you get in the money, don't hold it too long because they might not come down as far. You could literally just have it come down to the top and just move up again for the RSI with narratives this strong. Or you need NVIDIA to collapse. But yeah, these are strong. Artificial General Intelligence Exchange. And this is a crypto? This is a crypto AGIX? Oh, okay. I guess that's not really the ticker. Artificial, because crypto and I'm always skeptical of that. There's not really a mix of blockchains and AI don't really mix. So I'm always skeptical of that. They don't actually mix. Because AI takes so much data. I don't mean to ruin your dreams, but from a computer science point of view, and I'm not a computer scientist, but I've listened to a couple of people talk about it. They don't really mix. So I'm a little skeptical of that stuff. But hey, maybe you know something I don't. All right, let's go to a couple other plays here. Who do I have in play at the moment? Coin. Oh, coin is dumping. Now, if this ever recovers, when it does recover, this should be nice for coin. Obviously, the signal is Bitcoin catching a bid, obviously. So I'm liking coin at the top of that previous support. We have a couple lines here. I got stuck there, stuck there. So maybe this is, well, and this doesn't really matter. You need Bitcoin to recover, but you're at that support or that previous resistance level. That coin hasn't done much last year. Oh, from a marketing standpoint, AI mixes with everything. I have an AI toaster to sell. Interesting. Well, I'd argue blockchain is much different than other things. And I'm not saying I'm not saying there's no potential there, but a lot of people use that, the crypto space is scammy. They use AI as a buzzword to get buyers to buy. And they tried it with the graph, which had nothing to do. I remember they said the graph is the AI crypto, and it surged. GRT, it surged on that news, right? It was right back here. Look at this surge. I mean, this thing went from this is I believe when AI started to hit the stock market, pretty much saved the stock market. It surged 300%, bro. And they're like, no, we have nothing to do with AI because blockchains don't mix with AI. Blockchains, I don't know how to explain it best, but as far as my knowledge goes, AI takes a lot of data and blockchains can't hold that much data. They don't hold the amount of data that a real AI model needs. Now maybe the structure is different, but that's as far as I know, that's what I've heard. And that's based off of my brother and some other people. So I'm always skeptical of those, but good luck. I hope you make money on it. I mean, I'm not doubting it. It's just you got to be skeptical here. You got to question everything. That's how you get scammed in every market. They just attach AI. As a matter of fact, how's the stock AI doing? AIC3. Look at this trash. Remember, it started exploding. Same thing. AI. And now you find out it's trash. Reverse Head and Shoulders. I mean, Head and Shoulders. My bad. I mean, man, that looks like a good short. Look at that. Look at that Head and Shoulders. And it got rejected at the trend. Man, that might be a nice short for some people, but you never know. These things could gap up for no reason. So the graph is an indexer of blockchain data like Google is an indexer. 100%, Doifer. 100%. So yeah, I know AGIX USD is actually has something to do with AI. Maybe I just don't know enough about it. If you're in the business of making money legally. Oh, okay. Yeah. True. Very true. My indexer play is called Covalent. Okay. CQT USDT. Why not the graph? Isn't as far as I know, the graph is by far has the most data for indexing. It's still relatively small. Number one spot, as far as I know, is the graph for indexing data. I don't know how big the market is for that. Also, Disney looks pretty good, even though it's already kind of broken out of this wedge. I mean, a nice pull. It's consolidating. That's good. It's consolidating a bit. There we go. Consolidation. Here's your stop, 95. 95.80. Holding that. Let's go to the weekly. See what the week, because I've learned this new trick. I mean, it's not really a new trick, but I'm just trying it out. Is using the 10-week moving average. The 10, not the 50, not the 100, not the 200, the 10-week moving average. So maybe it has a little more time, but it does have momentum. That's Disney. Pretty good momentum there. PayPal, I don't know. I know people are believing in PayPal. I don't know. Maybe since they cut their revenue will be better on earnings. What is this? February 7th? Yeah, so maybe we'll see on the earnings call. I know they shaved a lot of employees, so That'll help out the revenue. I mean, that's a big descending pattern. IWM, I think it did. Did it find support today? Yeah, I like IWM at the moment. If we get rates roll over, I like IWM. There's that big demand zone right here. So maybe it has a little more room to come down. We'll find out. And then this one looks, I like this one. We haven't really seen biotech move as far as the index. I think it's IBB. Okay, it had a big up. This is just the index for biotechs. Okay, I like to look at the overall market. If I see something that I like, I want to see where's the overall market for it. And it looks like it's still trying to get past this resistance. Still trying to get past resistance for the biotech. But on the flip side, CRISPR technology, who did have the FDA approval for gene therapy, and that's what kind of made this big move. It was a buy the rumor, sell the fact, though. It moved up into the rumor, sold the fact. Now it's consolidating, very tight wedge. So I like that, very, very tight wedge. Maybe your stop. And this thing's kind of tricky, so I would still put a stop below. I mean, it's so tight, I'd probably put a stop at below 6150. Then if it regains, it regains. But this one, I think, does have some potential. All-time high is, but that was off exuberance. That was off of zero rate, so can't really bet on it. But, the cycle is moving up. And then I like Zoom, even though the technicals don't look good. The business model for Zoom, we'll see how the earnings go. I like Zoom. Balance sheet solid. They have their cash, I believe, is about the size of their market cap. So I do like Zoom. More fundamentally, though, not really technically. Technicals don't look great unless they find some support here. But I like them fundamentally. And then Twilio. Oh, it's starting to test the bottom. AI play. Another AI play. Twilio. See if it holds that level. Twilio looks really good. This was a very strong stock in the past also. But again, zero rates. You need rate cuts. You need rates to ease a little further. Today we had rates tighten on us. I wonder how the silver mining companies are doing. I remember you had a guest who recommended some of those about a month or two ago. Oh, that's right. I don't remember what silver he was looking at. Silver mining. When it comes to commodities, I guess there is some good plays that you could trade. I just don't know enough about commodities. I'm not sure that the old business cycles for commodities are the same as they were, because in the past, the commodities were a big part of the economy. They still do matter. They still correlate, but I'm just not sure, because you have technologies that can produce so much silver, or at least put them into play much faster, that the supply just rises. As soon as the price rises, supply rises, and you don't really get much movement. I'd rather have something that's more scarce, like Bitcoin, Chainlink. I guess you can't say Chainlink is so scarce, but the supply is very small. It's a $9 billion market cap. But I'd rather have scarcity. But yeah, they're probably, I don't know. I don't know what they look like. I don't remember the ticker. I don't know anyone who uses Zoom. Everyone uses Microsoft Teams. Well, it's more so Bukowski, not so the Zoom thesis would be B2B, not really business to customers. It'd be B2B. And there was some regulation. I don't know how to explain it exactly. There's some regulation where nobody, I don't want to say nobody, but they wanted to get away from Microsoft Teams because of the data breach. So businesses don't want to be tagged to Microsoft, because they compete with Microsoft to some degree. So they don't want to use Microsoft Teams, and Zoom is idiosyncratic, or it's on its own. It doesn't really compete with the companies that are using it. So the B2B part, now, does that thesis hold up? I don't know, but it had something to do with government. That's why I was like, they didn't want government using Microsoft Teams. They'd rather go with Zoom. And the balance sheet is really good, so that's why. But yeah, I get you on that. It was Fortuna Silver Mines, FSM. Oh, yep, here it is. Yeah, not a big fan of this price action. I don't even know how much volume this thing's moving. Not a big fan. Just move sideways because as soon as price goes up, the supply increases. EXK, man, these things are getting smashed. It probably has a lot to do with China's economy struggling. There's no impulse yet. A lot of deflation happening. I mean, eventually, maybe, but again, I don't know. Just based off price, I don't know. Wouldn't bet on it. HL. No, I don't like it. But again, I don't know. I don't know the fundamentals of silver that good. I'm not willing to do a deep dive. So who knows? Is it Palantir? Oh, are we at? Oh shoot, we're at earnings, huh? All right, let me jump on the. Let's go see if we could find Palantir earnings. I almost forgot.
Big five names of the Mag Five, we still like their fundamentals are very strong. The secular growth there is very strong, but at the same.
All right, we got him.
Right now, you have
Eric, we got our first earnings crossing, so
Sure.
I'm going to interrupt you. Hold that thought. Palantir results are out. Palantir earnings in line, 8 cents per share adjusted. 5 straight quarters of GAAP profitability for the company now. Revenue of $608 million. That was a beat. Here's the big story. U.S. commercial surging 70% in Q4 year on year. U.S. commercial customer count up 55%. Total contract value for U.S. commercial up 107%. CEO and co-founder Alex Karp telling me Palantir did 103 contracts above $1 million. That was up 2x. At the $5 million range, up 3x. At the $10 million range, up 4x. Adding, quote, we've done this with a nascent sales force that's finally getting its toe in the water. Karp saying, quote, the success and prowess in U.S. commercial will bleed into the most interesting governments in the world. Case in point, Israel, which is buying Palantir's warfare software, and what Karp believes is a first for a company that isn't Israeli. The artificial intelligence platform, AIP, those boot camps playing a big role here. In October, Palantir targeted 500 over the next year for its commercial customers or prospective commercial customers. It did 560 in 4 months. Karp saying they're going to aim for 1,500 to 2,000 boot camps this year. CTO Sham Sankar saying, quote, it's easy to build a fun little chatbot, but it's much harder to do something where you're actually generating extensive value from what you're building. With the boot camps, you get customers to build something that they're going to be proud to put in production. Now, Palantir not breaking out new customer mix of AIP versus traditional foundry services. Executives noting AIP integrating across all of the customers, both new and returning. A few more things here. Commercial revenue up 32%. On the government side, revenue growing 11%. On defense, Sankar noting he thinks monetization will lag a bit, quote, because we're in the midst of this long-term secular shift in defense tech of the department learning that it needs to buy software and basically what that process is going to continue to look like. First quarter revenue, 612 to 616 million. That's slightly shy of street estimates, but other metrics for the full year do seem to be pretty strong here. CFO Dave Glazer noting 34% margin in Q4. That's going to come down slightly as the company invests, still higher than the overall 23 margin. Guiding for U.S. commercial revenue in excess of 40% this year. That's going to be an acceleration. As I'm talking, the stock's moving higher. It's now up almost 4%. Final metrics here. Cash flow guidance, $800 million to $1 billion in 2024. And perhaps unsurprisingly, John, Palantir is applying its own Gen AI capabilities to its own company. Karp noting, quote, part of the reason we're making so much money, if I dare say, is these LLMs have made our product even more efficient. We don't just need the same number of people to install it. We can train other people to use it quickly, so we have less people, more success. Stock's higher right now in after hours.
Yeah, it's moving around a lot. I sense a little shade in it's easy to build a fun little chat bot. You know
Thought you'd like that quote.
Who's that aimed toward? Who does that shade belong to?
Ooh, okay. So yeah, Palantir is it's consolidating 1750. Sorry, those of you on TikTok, we got banned for mentioning the name Tesla. That's crazy. I challenged the ban. I guess we're back on. But yeah, at least unless somebody's trying to report me for even mentioning Tesla, that's crazy. We'll see what happens. Maybe their AI just sucks. But Palantir is ripping. We're at 18 at the moment. Looks like they beat. I'll go take a look at their earnings. Let's move back over to take a look at those after hour charts. 1830 at the moment. Good. Fun little chat bot. I know. Yeah, making fun of them. I mean, I think it's the best AI pure play. I hate to see the stock launch without me, but I got to stick to my convictions, which is, I think Chainlink outperforms this also over time. Yeah, we're back. I know we got taken out earlier from doing a Tesla chart. It's crazy. I wonder if we got our friend Polar Vortex jumping in and just trying to ban me. He should be happy if he shorted Tesla. Anyway. All right, so Palantir, let's go look at those earnings results. Let's see what they actually did. Dang, man, I think it's gonna be at 20 by the end of the day. Whew, yeah, looking good. It's pumping. So they're just in line with EPS. Revenue barely beat 605 million. That call is going to be important. The earning call is going to be huge. Revenue growth, pretty good revenue growth. $93 million net. Nice. We're at 1840. All right, so all-time high, I believe, is what, like 20 for Palantir? Let's double check. I think it's like 21. Not all-time high. 52-week high. 2185. 2185. We're at 18. But it closed at all-time high closes like 21. You guys think it goes to all-time highs or 52-week highs by the end of the earnings call? More earnings. Who's this? Chegg. Nobody cares about that. Chegg is the one that Chegg is the company that got destroyed from all these LLMs. Because who needs books when you can use ChatGPT? I know a couple people are happy about Palantir's earnings. That's insane. Should have bought calls. I was thinking about it and I was like, nah. Now it's passing my Chainlink price. Big homie says, don't mean they're gonna stay up till tomorrow morning. Are you familiar with the company? I mean, you're right. It doesn't mean it's gonna stay up till tomorrow. But if you're familiar with Palantir, then you kind of know that they've been held down for a while. They had that first big earnings beat where they exploded back in, I think it was it the summer when they first moved up? And this is actually when we first started streaming on TikTok. I have a couple of videos of Palantir. I said #1 AI software in the world, exploded from what, 7? It got down to 5, exploded from 7 to 17, and it's just kind of been consolidating that whole time. I mean, it made a couple bigger moves, but it came back down. So at this point with Nvidia, all the AI hype, but no real AI names other than Microsoft, Google, there's going to be some people piling into this name. Also, they're supposed to go into the S&P 500. They beat Gap. They're probably going to be a candidate for S&P 500 in the coming quarters at this point, which gives more, which gives you a lot more inflows. Remember, Tesla got put into looking for a high volume node at 1997. What about Baba? Baba, I mean, I know people keep diving for these Chinese stocks. It's just not time for Chinese stocks. They keep trying to pump the markets and it's just not working. Not at all, but I'm familiar with earnings. Oh, okay. Yeah, I mean, you're right. They don't always stay up, but I think the thing you got to ask is, what are the conditions for the market at the moment? Right now, there's a big craze on AI still. And now it's like, well, what AI is actually working, not just the name. Palantir has really good AI. Like I said, fundamentals are really strong. They have no debt. Earnings growth is strong. Beat top, bottom line. They're being used in Ukraine. They're being used in Israel, in the Middle East. They have a lot of government contracts. They're commercial, which is non-government. Those contracts exploded. That's what's getting them up. So the knock on Palantir was that they were only government. Now the commercial is growing strong. So when you get commercial growth, it's like, oh, this is Palantir. Yeah, I'll chart it. When you get commercial growth, then that's what they wanted to see. That's what Wall Street wanted to see, was commercial growth. Actually, I'm going to chart it on this one. So let's go to we're going to chart it. We're going to start with the monthly chart to see where the big money is at. Okay, so obviously a lot of resistance. It's sorry, I adjusted this for YouTube. Let me readjust this chart now that we're unbanned on TikTok for mentioning the word Tesla. All right. So we have a lot of resistance here. This is where the big institution sold 20, 25, 26, which is back then. I remember I started buying here. I got smashed on Palantir. So that's what you're looking at for resistance. Next resistance is right here, which I think we're running into at the moment. Let's see if call that resistance, call this one resistance. All right, so those are the big resist 25 and 20. Basically, those are the two levels 25, 20. Yeah, I'd say 25, 20. Going a little closer. Where's the momentum? I mean, it's holding. I think really you're looking at a big move. If we get above 20, it probably trades at 25. See where it's at now. It's at 19. So somewhere around here. Yeah, so they got those commercial contracts. That's what the market wanted to see. I think it has a long way to go from here. AGIX is pumping with Palantir. AGIX? Oh, AGIX. Is it? Check it out. That tells me you got a big bag of AGIX, huh? I know how it is. See if there's anything else on here. I know Emit is showing some stuff. If you are interested in Palantir, there's a YouTuber named Emit Investing. He always has the down low. This is his Twitter. Emit Investing. And you'll find his YouTube on there, but he always has a down low on. Oh, I wasn't showing you guys on YouTube. You guys probably already know. I interviewed him like last year. Oh, somebody asked about Baba. That's right. Baba, I don't know. Initial jobless claims. Somebody asked, what about initial jobless claims? Oh, okay, we got some good questions in here. Initial jobless claims. I didn't even look. We'll take a look at initial jobless claims. Are they talking about Palantir? Oh, there we go. Let's see what they're saying. Okay, so yeah. Here's what they have to say about Palantir, and then I'll look into initial jobless claims. But I wanted to get you guys to listen to, or have you guys listen to what they're saying about the commercial, because that was the big beat, is commercial. They're starting to grow their commercial contracts.
On what we just got here from Palantir, because particularly on the U.S. commercial side, just trouncing expectations with very strong commentary, and it looks like outlook for 2024 with that growth expected to continue accelerating. Your thoughts?
Yeah, they've definitely cracked the code on how to translate their leadership in AI into the commercial business, starting with the US. They've started these AIP boot camps, which is an accelerated pilot to get some of their enterprise customers to figure out how to use AI in their current context with these new generative AI capabilities. And they've been able to do that very rapidly after producing a new product set about a year ago. They're now fully in stride in terms of getting enterprise customers to engage and adapt some of these products early.
Yeah, I wonder what your thoughts are on the fact that we now have a company that, from a GAAP earnings perspective, has been profitable for 5 quarters. They're growing their free cash flow based on, and particularly based on the forecast we have for 2024. And we did get commentary from executives, including Alex Karp, the CEO over there, that basically they're able to do more with less as they take these generative AI and software capabilities that they're offering to commercial and government customers, and they're applying them internally as well. How does that play out in terms of the cost savings and what that does for the profitability of this company?
Yeah, that is a very interesting aspect of adopting AI. This is a company that's led in the application of machine learning for more than 20 years. It's just a year ago that they started incorporating generative AI capabilities. Not only did they produce an external facing product set for enterprise customers, as we just discussed, they're also using those tools internally, and they've embraced that internally. At the same time, they did what a lot of technology companies did last year, which is start reducing headcount while they were growing by taking it out of places where growth did no longer existed and refocusing it on places where growth.
So there you go. Commercial is starting to pick up, and that's where you really want the growth to come from, is commercial. I mean, military is a for sure drip. That ain't going nowhere. So you have a base, but if you grow commercial, like who's using Palantir? One of the car companies. Who is it? Carvana. Carvana is using Palantir. A lot of them for supply chain management. Basically, like Carbide said, it's actually real world AI, not chatbots, real world AI. Um, and I mean, it's hard to explain everything because it's going to be foreign language, but that's the real edge AI case where you have you have the internet of things, and you have AI at the edge where you have like a smart, a smart refrigerator. Um, and you could just talk to it, and then you have AI capabilities with that. So Palantir I think, is the best AI play that you can get. Now, the person who asked about initial jobless claims, there's no, the initial jobless claims aren't really going anywhere. They're still low. You're at what, 225, 230, not much movement there. So no recession. I don't know who's still talking about this recession. I know some of the people I interviewed, or Josh, he believes in recession. We disagree on that. But the data, if the data doesn't really show anything. So you either believe the data or you don't. I happen to believe the data, because forget the data, the market is reading the data, right? So this is what the market's looking at. There's nothing wrong with jobless claims. They're stuck where they're at. People are finding jobs. There's actually a supply. Who's this? Oh, Simon Property, don't care. There's actually a big supply of jobs still. So no, I don't see anything with jobless claims. But you did miss well, actually, you could just go to the YouTube video if you want to see the macro presentation. Looks like Palantir is getting stuck a little bit at 1926. Somebody asked about, okay, we'll do BABA real quick. Take a look at BABA, or let's look at the technicals. They probably look like trash. I think I saw a bunch of inflows. So this thing might have a bullish divergence because of the inflows. Here, let me switch over. We might have some bullish divergence here. But the Chinese market has an issue because a lot of the growth is in real estate, and the real estate market pretty much collapsed. Not much growth here. Bob is at the same levels it was 6 years ago, 7 years ago. And I know it's like, oh, it should pop, but that's what people have been waiting for a while. You got to wait for the momentum to come in for Baba. Whoever was asking, wait for the momentum. There's no momentum here. And so we can trend down for another 6 months. No momentum. Wait for the momentum to actually come in. And you'll see that when you get above the 10-day, when you get above and actually hold, this yellow line is the 10. Actually, this is a week. The 10-week moving average. Once you get above the 10-week and you hold and it starts to point up, kind of like it did back here, you got some momentum. But as of now, there's no momentum here. There's no momentum in these Chinese stocks. Maybe a couple of them, but definitely not Baba. What do you think about Rivian? Trash, to be honest with you. Rivian, trash. If Tesla is struggling in earnings, trust me, Rivian's going to struggle with earnings. So I'm not saying it's going up or down, but nah, I don't. Oh, this isn't Rivian. The heck? And the chart looks terrible for Rivian. This is a terrible chart. It needs time. It needs time to see if it can even support this level. So Rivian, I'd say trash. Ford earnings. Did Ford already have earnings? Yo, Ford is a zombie company. Let's go to that daily chart. I'm a little biased against Ford, obviously, because I like Tesla. But nah, bro, I don't believe in none of these automotive companies outside of Tesla. VW might be okay. We'll see how Lucid does if Apple buys Lucid. Neo, a lot of people chasing Neo still, but Back here, I was like, nah, dude, they have they're losing so much money. And these are capital extensive. They're not software companies. They have to buy hard goods. I mean, a hard infrastructure. So if you lose money, you're in trouble. They need to borrow money, and who's going to let them borrow money? Nobody. So I wouldn't mess with these at all. Yeah, Neo, heck no, trash, trash, trash. We told you this is trash. Nope, 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 nope. It might pop. If anything, shoot, I'd short it. If it pops into this level, I'd just short it. I wouldn't even think about shorting. That'd be a waste of my time, but nah. Would you say index to short China YXI? YXI? See, I wouldn't even try to short China either, though. I mean, it's worked, but I wouldn't even short China because you just never know. There's no confirmation or clarity on when the market does pop. At some point, it'll recover, but they got a big demographic issue. They have a shortage of labor. They have high youth unemployment. They don't even have much youth. They have well, I don't want to say they don't have youth, but they don't have any growth. It's all in that real estate market that popped. I actually like Rivian for the long term. There's talks about passenger car with Rivian. They have a lot of cash and Amazon endorsement. Yeah, they do. It's a tough environment, I'd say. So, I mean, for the long run, sure. You never know. The Amazon could drop them real quick if it's not going to be profitable for them. That happens often where they'll invest and it's just going nowhere. So I don't think there's going to be a lot of winners in the EV space. I just don't. That's my opinion, but I don't think there's going to be a lot of winners. BYD, on the other hand, is gaming and EVs. So this is probably the hottest Chinese name, or one of them. But yeah, other than that, no, I don't think so. What is this? 142. Verizon. Just V, right? Ooh, Verizon's popping. Oh no, this is Visa. My bad. VZ. Verizon. Let me guess. Robert Pratt. You bought this for the dividend, huh? I mean, it looks like it's starting to recover. Let me go to that weekly real quick. Let's see what it looks like on the weekly. Looks like it's starting to recover a little bit. Down there would have been a nice buy. It doesn't look bad, actually. It looks like it is recovering. Hold on. Give me a second. Let me grab some water. It's already been what? We got 145. We'll do about 10 more minutes. You bought at 31. All right, let's see what we got here. 31. Oh, okay. You got it at 31. Well, bro, that's a good price. All right. So if you're at 31, let me see. You got a lot of resistance. Somewhere around here. What are you trying to do with this? Swing trade it, or you want to own it? Verizon is a partly zombie company, so I'd be careful, which is why they give such a big dividend out. They're going to get disrupted by Starlink. They're going to be disrupted by Starlink, so I wouldn't own this. Also, it's actually at resistance right now. 42, 42.50. If it can't get above that, got a little reversal pattern here too. Big upside impulse, and then nice doji. I just call this a doji. I know there's all these names, but it's a reversal candle. Reversal candle made a new low, and it closed below that candle. So I'd be out of this if I was at 31 personally, unless it can get above 42.50 and hold. That's what I would say, Mr. Robert Pratt. Hold long term for the dividend or what? I mean, just so you know, Verizon peaked out in 1999 and again in 2019. It doesn't have much growth. It doesn't have growth at all. This is the only good thing about this would be the dividend, but again, unless you're not going to grow with dividends. I'm just going to tell you the hard truth. Dividends ain't going to do much for you. You're better off buying US Treasury. Well, I can't say that. Excuse me. Not financial advice, but US Treasuries have more upside than Verizon. Also, your dividend would have to, like 20 years of dividends is about the same as what Nvidia does, right? In like 2 years. So that's why. I mean, I get it. Like people like the dividend stuff. But I'm just trying to keep it real with you. I've been doing this for a while, and dividends ain't gonna do nothing for you. The dividends are mostly to preserve wealth. So once you say you say you have like $10 million, because really a 5% dividend is gonna make you about a 5% dividend is gonna make you about $100 for every $100,000 that you have in it. So you need $100,000 at 5% to even make $100 a month. That's not much. That's really not much. You said tobacco companies who's like tobacco companies like PE or not PE, PM, Philip Morris. And yeah, Verizon's gonna get disrupted. That's the other thing is it'll get disrupted by Starlink pretty soon here. There's a big disruption happening in the whole market. Does tobacco get disrupted? I don't know. I don't think there's any growth. I know a lot of people, they get pissed off, but I'm just telling you, like they get outperformed. Like crypto destroys these big tech the only thing you should really invest in, actually, I can't say that. Let me take a step back. The only thing that grows over time is either crypto, okay, and not all of crypto, like 1% of cryptos in the bottom of the cycle, or tech stocks. Right? Pretty much everything else is trash, to be honest with you. But Verizon as a trade looks good. Definitely looks good as a trade. I can't really talk about long-term investments. I'll tell you what I wouldn't do. So the risk for Verizon, it's not growing anymore. It's probably going to get disrupted. I don't even know if it probably trades sideways for a while. If you have 10 million, hey, throw it in Verizon because you might get actually, I think it's about 2 million. If you have 2 million, it'll give you about $8,000 a month, I believe. If you have about 2 million. Most people are not putting 2 million. They think the dividend's going to give them compound interest. It's not. That's for rich. That's to preserve wealth. Let me just put it that way. If you don't have it yet, you get wealth through growth and then you preserve it by rotating into dividends. I like Caterpillar has a lot of growth still. Oh my gosh, this thing is exploding though. You got to pull back into that trend for Caterpillar. Yeah, Caterpillar looks good. I think I mentioned this a while back because the infrastructure bill, right? The fiscal dominance, the reason why there was no recession because of the trillions of dollars of fiscal policy. They're building trains, they're building roads, they're building buildings, they're building manufacturing facilities. Caterpillar is pretty much the blue chip for building anything. They're also in China. But I would wait for definitely wait for a big pullback for Caterpillar. I like Caterpillar. Caterpillar and DE are the two Deere company, but I think Cat looks better. Actually, I don't know. It does look better because Deere hasn't really done much. When it does move, it'll probably move. I'd stick with Cat personally. I think I have them in an actual, what is it? Commodity minings, big data, industrials. There we go. So industrials, you have logistics. FedEx ain't doing nothing. I think UPS laid off. They should be going higher. UPS might be a nice play because, ooh, it's getting destroyed. They're laying off workers. Who's disrupting UPS though? Somebody is. What is BATS? Oh, American Tobacco. Bro, you can't support tobacco use. No, I'm just kidding. I mean, this thing peaked in 2017. I wouldn't mess with this. Forget the dividend. Your dividend's going to get lower and lower value. It already dropped below. This is just a trash chart. They have no growth. No growth. And we're moving, on a macro scale, we're moving towards a healthier, less tobacco. I mean, if these companies innovate, then they'll do okay. They'll innovate into like different types of drinks or something because the old business model was for the baby boomers. Let's just keep it real. These are baby boomer stocks, right? When tobacco was a big thing, but that's not the case anymore. It's kind of, I can't even say the word. I'll get banned on here. So what is the secular trend, right? What is being adopted in the economy? That's why I like innovation. What's being adopted? What is picking up? Celsius right now is a huge one. CLA, because of health. What is it? CLH. There it is. Celsius is probably the fastest growing energy drink. And that thing looks like Monster back in the day. This thing is, this is a monster right here because it's being adopted. I drink Celsius pretty much every day. Is it great for you? No, but I also do a lot of and I don't like the carbonated ones. I like the tea ones. This looks good, especially if it keeps supporting 50, the 50 level. PayPal. Wait for earnings on PayPal. I know you saw PayPal. Yeah, this one actually looks really good. I like this. It's holding support. PayPal though, I'd wait for earnings. Earnings come out in a couple days. It looks like it's starting to wedge here. But it's an earnings play. We'll see what they do on earnings. It could just tank all the way back to the lows, so don't get excited. Don't get too excited. Be careful. Catalyst, market dominance. Yeah. Market dominance. Yeah, on a pullback. Amazon. Yep, Amazon. I mean, Amazon's dominating. They came out with their new chat dot. What's his name? Rust. Amazon looks good too. Holding those highs. This might be like Nvidia, where it and your real AI plays are Amazon, Google, Meta, Apple, Microsoft, and those are big caps. And then you have Palantir. Where's it at? 1930. And then you have Palantir. Let's see. Funds are dropping tobacco ESG for ESG. Exactly. There you go, Bokosi. Exactly. It's just the changing of the times, right? You got to come up with new products. There's always innovation. Things change, demographics change, social issues change. So what's the next big thing? I don't know. UPS is going to be a good buy. I think UPS, FedEx are going to continue to be more profitable once AI from Palantir helps with efficiencies. Yeah, I agree. UPS, I think UPS is strong. I wouldn't doubt UPS anytime soon, for sure. They're also going to get help with blockchain technology. They're already working with a lot of them, Chainlink technology for supply chain management, which is why if you read my Twitter, I'm the most bullish on Chainlink and Palantir. It's only a matter of time before AI hits hard. Yep. I think it's coming quick. Wait, I thought JPM fired most of their ESG team. Maybe, I don't know. I have no clue, to be honest. It's still a thing. Can you see PayPal? I think I already went over that. PayPal is wedging, but look, you got earnings coming up. So you need to get above. You really need to wait for earnings because none of this is going to matter once it makes a big move. I mean, if it can hold 66, fills the gap at 73 for PayPal, but it could trade right back down to the lows too. So wait for earnings. Don't do nothing crazy. Wait for it is consolidating pretty nicely though. So I'd wait for earnings on that. I know people don't want to wait, but you'll learn the hard way. Also, if you buy options, you're going to be buying a bunch of vol and then you get crushed. ARKG. Okay. Genomics. You weren't here earlier, but genomics, this is Kathy Wood's basket pretty much. It's okay. I mean, I'll put it this way. If you're going to look at genomics, look at IBB. You're going to want to look at this and make sure this starts to make a move. This is biotech in general, the biotech ETF for the stock market. Once this starts to make a move, you'll be okay. My favorite play, not financial advice, is CRISPR because they finally got FDA approved. There's probably other plays out there, but this is one I know of. They finally got FDA approved for CRISPR editing technology. They've been consolidating for a while after that approval from the FDA. And there's a clear wedge pattern. It's either going to break up or break down. And I guess you have earnings February 13th. So that's going to be it. What are they going to say on earnings? Always wait for after earnings. Your easiest chance is between earning seasons. Eli Lilly. I think Eli Lilly is it actually a German company? Yeah, Eli Lilly is a monster. What is it? Isn't it Eli? What is it? ELY? Eli Lilly? I don't know what the ticker is. What is the ticker for Eli Lilly? I don't know what it is. Somebody's going to have to tell me. Coinbase. Nah, you're good on Coinbase, bro. Just stay patient with Coinbase. The crypto market is it's on leg one, and we're in spring crypto. We're in the middle of spring, disinflationary growth, and the cycle is just getting started. Coinbase will boom. Bitcoin is the proxy for Coinbase. Bitcoin goes up, Coinbase goes up. And the thing is, when Bitcoin slows down and altcoins shoot up, LLY, there you go, then Coinbase will go up with the alts also. Coinbase is a blue chip in my view, future blue chip. A lot of people just don't see it, just like they missed a lot of other names. Dang, yeah, I didn't know Eli Lilly. Looks like they're going to be $1 trillion company too. I need to put this in the industrial basket, but yeah, Eli Lilly is a monster. They do a lot of. This is a drug company. Oh, excuse me, TikTok. I don't even know if I can say that. Pharmaceuticals. You know who else we've been missing is our MRVN, not MRVN, Lilly. Let me add Lilly to the healthcare biotech. I forgot about Lilly. There we go. And then we also have mRNA, Moderna. Oops. I don't know if they're doing any good though. Wait for another crisis, I guess. These are just opportunistic. I don't like it, but it's a tough one. I don't like it. I wouldn't mess with it. But sometimes it can be a good trade. BTCM. What the heck is that? Bitcoin Mining Limited. Me personally, I don't like these. They seem like they're cheap or whatever, but nah, I would just own the right crypto. I think Ethereum is on sale still. If you're thinking crypto, Ethereum really hasn't made its move. Solana's Solana is trying to make a move at the moment. XRP, trash. I've been telling you guys on TikTok for a while. I don't think XRP ever goes back to all-time highs. It's struggling. It's not doing anything. Ethereum, 100% blue chip, consolidating. It's ready. It'll be ready soon. Ethereum's a good risk reward. But nah, BTCM, nah, bro. Either real BTC, Coinbase. I mean, there's even ETFs. There's even the BlackRock ETF. I think it sold off pretty hard, but I wouldn't mess with that. Solar ETF. Oh, TAN. Yeah, you know what? I think these are going to do well at some point. They're just the charts are nasty. You need more government initiatives. These might not move until next year. To be honest with you, these things, this thing needs lower rates, bro. Period. You need lower rates. You need lower real rates because a lot of these companies are at risk of default. They don't have much growth. So you need lower rates. You need speculation to come back in it. You need better regulation you need better legislation. I wouldn't mess with it at all. Even if XRP has a God candle, it will only be 40-50%, which is nothing. Yeah. Palantir broke out again. Uh-oh. Monster. What a monster. I wonder how their earnings call is going. GPC. Oh, what is this? Genuine parts. Oh, let me get to that daily chart. Genuine parts. Looks like it's trying to climb. I don't know how genuine they are. I don't know what they do, but looks like it has a nice trend. This would be, right into the trend. RSI is okay. I think there's better things out there, but I'd put a stop below 140. If it holds below 140 for a day, nah. Close below 140, nah. But it's on a trend. Genuine parts. 100% Robert Pratt. Hey, go back to the beginning and listen to maybe it's too high level. I'm trying to simplify it, but the business cycle. Listen to the business cycle content at the very beginning. YouTube. If you're on TikTok and you want to hear about the business cycle, go to YouTube, click the link and just listen to the open. It's like 10, 15 minutes. It shows you where we're at in the business cycle, all the evidence for that. Unfortunately, my Twitter froze, so I couldn't do it as smooth as I wanted to, but you can see all where growth is starting to pick up, and I'll continue on that business cycle, where the dollar's at, where the yields are at, where the rates are at, where the Fed's at, where the liquidity's at, where the credit cycle's at. We're at the beginning of the credit cycle, and rates are done. I think we're in a strong bull market. S&P probably needs a pullback a little bit. Crypto looks really good. Crypto will outperform. I'm very confident about that, at least so far in the cycle. But S&P, I would like to see it come back a little bit, retrace. Maybe it might just come back to that 10-day moving average. Where is it at? 10 days. Get that back on. I'm looking for it to pull into this yellow line, 10-day weekly moving average. That'll be a good, I think, point. I don't want to say it, but a good point here. I didn't see the 60 minutes. I gotta watch it with Jerome Powell. I doubt he says anything useful. Probably just repeats. He doesn't talk about policy. Look, Powell is trying to manage the business cycle. He knows inflation is making progress, but you got the ISM prices that exploded. You have the Red Sea conflict. You have insurance that can mess with oil prices. So as long as oil stays low, the Fed can cut rates. But if this ever explodes, the Fed's going to have an issue. This is really it right here. As long as it stays low, the Fed can cut. If it doesn't, they're going to have an issue. The market's going to correct pretty badly. We're in an election cycle. Usually election cycles do piss poor in the first half, and then they do really good in the second half. So I think the next pullback or correction should be a nice entry. Anyways, look, I'm done. 2 hours on here. Any last questions? Let me know, so I can go take my walk, get my cardio in, get my heart going. Let's see. Doifer actually said we don't comment on policy, but we're borrowing from future. Oh yeah, I did see a clip on that. He said that the debt is growing faster than GDP, right? So that's the thing. If debt grows faster than GDP, well, you're headed for a tornado lower. If debt keeps growing faster than GDP. But the positive that we're seeing is that so here's the thing, you have population growth. Well, we're not getting population growth, we're declining in population. So you don't have that. And what that does is more population, more workers, more spenders. We're not getting that kind of growth. Debt growth, that's what we do. From 2000 to 2020 to 2023, our debt has 5x, from 5 trillion to 32 trillion. Our GDP has only doubled from 14 trillion to like 23 trillion. So the problem is our growth is all coming from debt. Eventually something pops. I don't think it happens this year. I know a lot of people think it does. I think it doesn't pop till 2020, late 2025, 2026. We have another cycle. But the one thing that eats up debt and is real growth is productivity growth. That comes from innovation, blockchain technology, artificial intelligence. Why? Because you get more for less. You grow more for less costs, right? So that's what we're seeing now, an AI boom. I think GDP is set to explode. And this is why I think we're going to be in a big macro upside cycle. You just got to be park yourself in the right assets. I think it's crypto specifically, not financial advice. Chainlink is my favorite play. You know that. Palantir, love the play. Tesla, love the play. And there's other plays out there. There's a lot of stuff out there too, but that's just where I'm most confident in, that I understand. Where do you see it in there? How much? Where do you see Ethereum going price wise? Ethereum, I think at minimum goes to 10K. I think at maximum it goes to 20, somewhere between 10, 20. It depends on how the business cycle plays out. Bitcoin 150 to 250. Chainlink, I'm going to say 100 to 200. Like there's a big, it depends where you're at in the macro. It depends on economic momentum, liquidity, interest rates, the credit cycle. Is there a black swan? Where's Fed policy? Those drive the business cycle. And right now the setup looks really good. So, I mean, unless something changes, like I said, Chainlink, I'm going to say 100 to 200. I don't know exactly, but I think it gets up there because the narrative is blockchain tokenization of all real world assets. And that's what we're running into. And you know what? I'm going to leave off with this. This is why when it comes to Chainlink, okay, Chainlink is basically the whole financial system is switching over to blockchain, whether you see it or not. You're not going to see it. If you read the white papers to the banks, that's what they're doing. And tokenization is moving assets off of the traditional ledger onto the blockchain, not Bitcoin, not Ethereum. Those are public blockchains. They're going to move them on to private blockchains, meaning JP Morgan, Wells Fargo, BlackRock, Citibank. They all have their own private blockchains, and they want to be able to interact with each other. That's where Chainlink comes in with CCIP, where they can connect blockchain interoperability, right? Chainlink also is the backbone to decentralized finance in the first place. You need Chainlink for DeFi to even work, for Web3 to work. For the decentralized verified web, you need CCIP, right? So tokenization of all real world assets is the next big push. And then financial system efficiency. Hey, Robert, look, you can go, bro, just go follow my newsletter. I have a newsletter. It should be in the description for YouTube, but I do write a newsletter. I'm coming out with a course also. It's a macro course. Everything I know about macro fundamentals and technical analysis, I'm building that course for you guys. Everything I know, I'm simplifying it as if you didn't even know anything. Like you're a 9th grader, 5th grader, very easy to understand stuff, right? Breaking it down. So yeah, you want to support me, just go follow the newsletter and just keep up to date. I just sent one out this weekend, goes over the business cycle, my favorite plays, and yeah, try to simplify it in there, bro. Appreciate the sub also, Robert. Good luck. For Link, yeah, I already told you for Link. All right, so what did they say on here? Anyways, yeah, Link, I'm bullish on. You guys know $5. We started talking about $5, $7, 14. Now it's at 19. It's moving. Let's go. Still sticky, more focus on business cycle. Fed are cutting rates because they want, not to because they have to. Would you say still sticky, more focus on the business cycle? Fed are cutting rates because they want to. Well, they're cutting rates because they're very restrictive and it's going to slow GDP. The Fed doesn't want to slow down the economy. They want maximum employment. So, in order to get maximum employment, you need to allow growth to continue to expand. But if they keep rates where they are, growth is going to slow and rates are going to hurt businesses. Therefore, employment starts to drop. The level of employment and the momentum, you'll see the momentum drop coincidentally with with the level of employment. This is all in the course, by the way, so you can read this, you understand it. And the Fed wants to do that. The issue is they can't cut yet because growth is so strong. They don't really need to cut. This is a good problem to have. They don't need to cut. The real issue is if inflation doesn't fall and stay sticky, then there is going to be some banking issues. They come in, they inject more liquidity. So I still think the market has a long way to go because it's growing based off productivity, not off debt, right? It's productive productivity. Plus, you have a lot of fiscal. The real thing with the Fed, they're pissed off because the government keeps spending massive bills. So government spending, fiscal, that's kind of what helped the economy in the first place. But they have to keep rates higher because they're like, dang, how much are you guys going to keep spending into the economy? That's not productive. If you have productive growth, you're good. You build manufacturing plants, AI, more jobs, labor costs come down, labor output goes up. That's good. That's good growth. But government isn't the best at doing that. So we'll see what the rates go. But yeah, they are managing the business cycle. I watched ISM. I'll keep you guys posted on that. Last thing here, the EU and China are hurting from high Federal Reserve interest rate. Yeah, China, yeah, they need cuts. They also want cuts. They're going to cut themselves. I think the EU cuts before the Fed does. This is our last shot at cheap European summer vacation. Yeah, probably true. This is our last shot at a gigantic crypto cycle also, I think. Anyways, you guys stay blessed, eat healthy, learn something new every day, lift weights, get strong, improve your mindset every single day. You guys stay blessed. I appreciate you as always. Take it easy. Catch you later.